Tedeschi Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. As we just closed out a month, we're going to take a look at the bigger picture in today's video. We'll look at monthly charts of the four major U.S. indexes, some commodities, and the U.S. dollar. We're also going to jump in, take a look at our current sentiment cycle, show you where we've been and what that could mean for us moving forward. And we're going to take a look at what happens when the S&P 500 makes 4 consecutive monthly closes at a record high, which we've done. All right, let's jump right into it here first with the S&P 500. And as I just said, you can see we have 4 monthly closes at all-time highs. 1, 2, 3, and we did close last month at an all-time high. We're basically right up there at that all-time high at this point in time. We have continued to just grind higher from that breakout after last year's flash crash there in February and March. We turned around and we continued to push higher. This chart is very bullish on a monthly time frame. When we take a look in at the Nasdaq here, same thing. I mean, we haven't had 4 monthly consecutive closes higher, but you can see we are up near those all-time highs, and we had our huge push from that breakout early last year. So this was the leader out of that low, and trading sideways for a period of time and digesting that move would be perfectly normal. I mean, if we go back in time and you look at some of the previous runs that we've had, we could end up in a period where we have sideways action for a year or two to work off, that incredible run that we've had. That would be perfectly normal, and that would be perfectly constructive. When we take a look at the Dow, again, we're up near those all-time highs, right? 1, 2, 3, 4 monthly all-time high closes in a row from that breakout. Now that breakout, when we looked at the Nasdaq, happened in about this month, whereas the Dow, it was the end of last year. But this has been a nice strong push. Again, sideways action for a bit of time on these larger time frame charts would be perfectly normal, perfectly constructive, and there wouldn't be anything too concerning about that. The Russell, 1, 2, 3, 4 monthly all-time high closes on the Russell as well. Actually, if you want to count it, it's actually 1, 2, 3, 4, 5, 6, 7 monthly high closes in a row out of the Russell because, again, we made that break at the end of last year and actually have closed higher every single month since. Now, we haven't really accomplished much this year after the first month's push. We've traded in this range, and we keep talking about that in on the Russell to look for either a follow through here to the upside or continued sideways action. But we've just been kind of bouncing around in this zone. Again, perfectly normal, perfectly healthy, perfectly constructive. Now, when we take a look in at the U.S. dollar here on the big monthly picture, again, we've touched on this in most of these videos because it is so important. The dollar is at a very, very, very important key level. When we look at it on a monthly time frame, we still have a series of lower highs and lower lows in place here for the last 2 years. All right, that we are in a downtrending channel there. However, when we look at it over the last 10 years, we're really just in a sideways range. I mean, that's what we've been doing. We haven't had a break above or a break below. We're at the bottom of the range at this point in time. When the last time we were here, we did see the dollar rebound and push higher for a few years. There's nothing to suggest that we're going to go rip all the way back up, but there's also nothing to suggest that we're going to break back down. We are at a very important level, and that's why we keep touching on this. One of these times when we do one of these videos, the dollar is either going to have broken up and made it a higher high, or it will finally have broken below. Whatever happens, whichever one of those two happens first, that is where we are likely to see the chart continue to move. If the dollar breaks down, that should be a tailwind for commodities. If the dollar breaks up, that should be a headwind for commodities and could put a little bit of a stall in on the rally that we've seen out of the commodity space. All right, we're going to take a look at a bunch of different commodities today. We're going to take a look to start at wheat. All right, we're going to look at some of the soft commodities here. And so we can see wheat has pulled right up into that 750 zone, and that's where it has pulled back from. This is a nice, long, rounded base, right? You could get that cup and handle set up on a monthly time frame, which would be a very bullish look. Or, this could end up being that resistance point right here, and we could see, continued lower prices and kind of fall back down into this range. But this has the setup for that potential big move to the upside. What we want to see is that close above that 750 zone, that really important resistance from 2014. And if that happens, then we're looking up for that 900 area on wheat. Now, corn, extremely strong as well. Also ran into kind of a resistance point from back in 2013, 2014, up here around that 7.25 zone. This was a lot stronger than wheat so far off of this move to the over the last month or two. Less of a rounded bottom and more of a flat bottom. Right, very clearly 325 was support, and then we've had a breakout here, and then a secondary breakout here, and this continues to push up. What happens up here at that 7.25 is really, really important, so we'll continue to pay attention. Next, I want to take a look in at soybeans. Now, soybeans have a resistance zone in here on this chart at about that 1550 level, and then it's kind of open all the way to those all-time highs. And you can see we've been battling right around here for the last 3 months, right at this level. So if this can hold above, I can see a move back up towards that 1800 zone. This, like corn, is more of a flat bottom than it is a rounded bottom, so very clearly held that 800 zone here over the last few years, and a nice move here to the upside. Next, let's start looking in at our metals. So we'll take a look in at a monthly chart here of gold. I'm going to clear all these drawings out so you guys can clearly see this on a monthly time frame. We are going to put our highest monthly close from before, which is right here, and that is a very, very important key level. And then our second highest monthly close, which was put in earlier this year, up at that 2000 zone. So you can see when we look at this in on a monthly time frame, the area that we had difficulty back in 2011 to 2013 is right here in this zone. So the way that gold resolves from right here is really, really important. Now, you want to talk about that cup and handle pattern? Well, here's your cup, and here's your potential handle pattern. So the next move, if it is to the upside, could be explosive based on a decade worth of price action that we've seen right here. But a failure to get back up over that 2000 level, and especially if we fall underneath the 1700 level, would be very bad for this chart. So long term, this still is in that uptrend. It's up near those all-time highs. It's had 8 months of kind of sideways action after that huge push over the last year or two. Again, the consolidation is perfectly fine. So a cup and handle pattern could certainly be playing out here. We'll continue to watch. Next, you want to take a look in at silver. Now, silver has held up much better than gold over the last month or 8 months or so, where gold's kind of made that slide. Silver is still really up near those highs. But if we look to the left of the chart, and this is why it's so important to take a look at the bigger picture, silver, of course, is nowhere near its all-time high. So on a bigger picture, silver is certainly still the lagger to gold's trading up near those all-time highs. Now, we have a really important level here in place right at around this 29. So this line that's right here does correlate with where we fell off in 2013. The next spot up would be 35. So we're really watching what happens here. This could, of course, be that kind of ascending triangle pattern coming from below. So again, we need to get a clean move over that 29. We have not had a close over 29 on a monthly basis since back in 2013. So that is what we are watching on this chart. We'll take a look in at copper. Copper put in a monthly all-time high close last month and has given it back so far this month. Okay, so here we are a couple of days into the month, and we've already fallen back below that 450 level. We need to not take out last month's lows, and we need to hold over this 450. I do not like seeing a break above a key level and then not being able to hold over it for more than a couple of weeks. If you're talking about a long-term explosive trend, you want to see it hold up over those levels. What goes on with copper in this 450 zone is really important. We continue to pay attention to copper because, again, it is one of those potential leading economic data points, because copper is used in so many different manufacturing, building components. So strong copper usually is strong demand, and when we have weak copper, that can end up leading to weak demand. It's not a perfect barometer for health of the economy, but it's one that we like to pay attention to because it can give us some insight. Now, we'll take a look at Palladium and Platinum. Palladium is holding up over that all-time high. We actually closed over that all-time high 2 months ago and held back up over it. The highest monthly close before last month was actually around that 2600 zone. As long as it stays over that, that's still bullish. Still the best looking chart by far out of the metal space. Super, super explosive. Continues to put a new high, new high, new high, new high. When we look at Platinum, Platinum, of course, leaves a lot to be desired on a long time frame chart. 1300 is a major, major, major level for it. It needs to get up over that. We're still holding over that $1,000 zone. This is not nearly as good looking of a long-term chart as the rest of them, simply because of how much overhead resistance is in place. And as we know, Platinum and Palladium switched in terms of their usage a number of years ago inside of catalytic converters, where Palladium is used more than Platinum, and that can kind of lead to why Palladium has taken off over the last decade and why Platinum has kind of stagnated. As Palladium gets more and more expensive, people will go back to the Platinum as a way of cost savings, so we could still continue to see this make move, and Platinum's used in other things as well. So we're really watching this 1,000 to 1,300 zone, and we'll continue to pay attention there. Now, we talk about the S&P 500 with 4 monthly consecutive closes at a record. You know, not surprisingly, that is very bullish for our data set. We have actually a ton of signals here going all the way back to 1945, and we have a very high percentage of wins over a 3, 6 month, and a year rate of almost 90%. In 3 months, it's over 90% at 94%, right? You know, strong consecutive monthly closes, stocks trading up at all-time highs, is a bullish sign, and the data set confirms that. Always like to take a look at the sentiment data. So, you know, we have our smart money, dumb money confidence indicator. They almost crossed here, and we always talk about that cross a couple of weeks ago, and actually has turned back down. Smart money is starting to head lower, and the dumb money confidence is headed back up towards that kind of extreme. Again, we want to pay attention to sentiment data at extremes because that's where we find value in it. So we'll continue to monitor this if it continues to widen. Want to check in with our breadth readings. As we talked about, the low in breadth readings from last October out of the Nasdaq is exactly where we found support as of late. We have started to turn back up. There's still a lot of damage in breadth out of the Nasdaq. You have less names kind of holding things up, and that's kind of a trend that we've seen here over the last couple of months. We'll see if this can hold and continue to turn higher. This was an area of support, so if this is that turning point, again, we could be looking for that next move higher. We're going to continue, of course, to pay attention to what is going on with the actual indexes. Now, when we talk about sentiment, there's really 4 different things that make up the sentiment cycle. We have euphoria, panic, discouragement, and then returning to confidence. All right, we definitely have been in the euphoria category here for a while, and actually let's look at that on a chart. Now on this chart we have all 4 pieces of the cycle charted, 1 being essentially a perfect correlation, -1 being a essentially a perfect negative correlation. So you can see we are basically not in a panic zone, as we know. We are definitely up near that euphoria stage at this point in time, and returning to confidence, there's also a decent probability that it might be that instead. So when we have had such a long run up near this zone, another way we can look at this is how many months it's been since investors showed concern. Well, we are now at that over 6-month period. We're in a very long stretch. All right. Now, when we see a very long stretch without any sort of concern, we can look at this data set going all the way back to the 1930s. And what we actually see here isn't that surprising. We have a very tough time over the short term, meaning a couple of weeks, and then the numbers get very bullish for us over the long run. Now, why is that? We know when we get to a period of time where things get too euphoric, we oftentimes get those quick snapbacks. Because essentially all the people that have wanted to buy have bought in. We need a little bit of a quick pullback to kind of reset things before those major trends can continue. And so when we see readings like this, we look for some short-term weakness, right? Not any huge pullbacks in there, just a couple of %, but we do end up being negative, about 70% of the time over the next week or two. But again, we go out to a year, 6 months, a year later, we have a very high percentage of win rate because, again, those long-term trends, being extremely bullish, being extremely confident, trading up near those highs, those are good things over the long run. It's just in the short term, things can kind of run a little bit ahead of them oneself, and that's why we see those short-term pullbacks. Now, as always, I hope you guys found this information useful. If you would like to reach out to me, you can reach me at mtedeschi at perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I'd be more than happy to talk about anything related to the markets with you guys. I hope you have yourself a fantastic week, and hopefully this month continues to be as good as the rest of them have been. See you guys next week. Take care.